Welcome to the most awaited liquidity sweep and break of structure course. If you're a complete beginner in Forex market and trading, if you are at ground zero, at level zero, I will take you to ground 100, level 100, just via this course. If you're an intermediate but you're still unprofitable, this is the key to your success, this proven profitable system. And if you're an advanced trader who has tried and failed in many strategies, this can be the one. But again, the initial 5 minutes of this video will be the most important for you, where I will talk about mindset expectations before I dive into the charts. That's that's how trading works. You work on your mind before you dive into the charts. Before you actually understand trading as lines on chart, you have to understand yourself before that. Before I dive into this liquidity sweep, a proven profitable system, a edge that can make you financially free. See, this is what market is. Either you can be a gambler or you can be a casino. A gambler is the one who has no edge, no proven profitable system. He picks random trades and trades like a monkey. A monkey is given a random reward out of 5 trades. Like you win 1 out of 5, so your mind thinks that I can still win. So you take trading as a lottery, right? You take trading as lottery, you take trading as gambling. But then there's a professional trader who acts like casino, who is emotionless, neutral, and only executes on his edge, on his strategy, on his system. He does not care if the trade is lucrative, if it's FOMC spike, NFP spike. But if he does not know that, but if he knows that it's not a part of his system, he will not take the trade. That's what trading discipline is about. That's what a professional trader does. He follows his edge more than anything. He blindly follows his edge and is emotionless, neutral. See, if you're a complete beginner trader, you might be thinking, what is he talking about? What is psychology? You'll understand that. But I don't want you to understand the pain of understanding trading psychology. So just listen what I'm going to say. Only take trades based on this strategy. Once you learn, note it down. Once you have back tested this 100 times, and when you have traded on demo account and you're profitable, then only follow this strategy. Work on this strategy. You can follow any strategies on this planet, and it's just same as the next strategy. What will make the difference is always going to be your mindset, your trading psychology, how dialed in you are. So let's get straight in the video. One last thing before I want to dive into the video. Trading is a time-taking process. If you want to be a doctor, you give 8 years. If you want to be an engineer, you give 6+ years. So why rush the process for trading? Why not focus on learning through mentorships and these free courses? I'm not taking anything. Free courses. Why not meditate? Why not understand market cycles, adapt on market cycles? Why not create a strategy, execute, be a disciplined professional trader, learn financial markets, read financial markets, and grow as a trader, right? It's a time-taking process. You should be patient and disciplined. If this thing can make you thousands of dollars with one click, it's also going to take something from you. And that is time, dedication, consistency. For this course, I'm going to charge you $0. Anything. I'm not going to charge you anything. But there's one thing you have to give. You have to be consistent, dedicated. You have to take notes, and you don't have to skip a single minute of this video. If you skip a single minute, that shows that you are not dedicated enough, right? And if you're not dedicated enough, how can you achieve financial freedom through lines on charts, right? You have to be very dedicated. Let's dive straight into this. Let's start with this. Let's understand what I'm going to teach you. For example, you're a complete beginner trader. In the most basic sense, what do you understand from just this view? What is the trend? The trend is bullish. The long-term trend is bullish. There was a short-term profit booking or a short-term retracement on daily time frame. We do not trade on daily time frame, but I'm just telling you how this works. So in bullish time frame, how does market move? Market creates a higher high, then a higher low, then a new higher high, then a new higher low, then a new higher high, and a new higher low, new higher high. So if market wants to continue up, it will break higher high and respect higher lows, right? These are prominent swing levels, right? Now, what is our strategy? We find the bias of the market that is bullish. So we're 100% sure that we will only take bullish trades. What will we do? We know that for banks and big institutions and hedge funds to move forex markets, they need liquidity. Liquidity here in my strategy refers to opposite orders. I know I said it very complex, very complex. It literally went this. But let me explain you. For someone to buy, someone else needs to sell. And this is what liquidity is. For someone to buy, someone needs to sell. And if banks and big institutions are going to put buy order, they need a huge chunk of retailers or another institution to sell at that level. Because if this does not happen and someone buys here, the market will go down to find the seller. So the position of the banks which they wanted which so the position of the banks which they wanted to open here will open here. This is what we call as spread, slippage in forex market. Slippage, actually, not spread, my bad. Spread is a completely different phenomena, but this is what slippage is. So to avoid slippage, banks, big institutions, and hedge funds put their order at prominent lows and prominent highs. What do we see on this chart? We know this is an important level. This right here is an important level till that time, right? Before 30 October, this was an important level, and this was an important level, right? After 30 October, what happened is market came to this. See, banks wanted to take the market more up, so they needed more opposing liquidity. So they took the market here. So they pushed the market here to next liquidity stop, this level. So banks pushed the market to this liquidity level, this low here. Now you'll ask me, why is this the most prominent liquidity level? Let's understand that. As soon as in bullish trend, the buyers who have bought here after liquidation or break of this high will have their SL here, right? And new sellers will enter as soon as they see this low getting not respected. So we are trapping retail sellers and liquidating buyers by putting out their SLs, by stopping or tapping their SLs, and we are also trapping new sellers and liquidating buyers. So we have a lot of liquidity, a huge chunk of orders sitting here. Orders, limit orders of sellers, because they have put their orders as the break of this low. And buyers having their SLs here. Market will come here, give us a break of structure, give us a proof that now market will go up. That's a completely different process. I'll explain you. But right now, don't come down. Take a deep breath. Just understand what our trading strategy is in the most basic sense. Our strategy is in a continuation, a bullish trend or a bearish trend. We trade with the trend, we find a liquidity spot within the trend, we take the trade here for continuation. For example, if market is going like this higher low, we will wait market to come here, give us liquidity sweep and a break of structure, then we'll take the higher move up. This is why we have higher risk reward and lower, not lower win rate, a higher win rate and a higher risk reward. So that's it. In a bullish trend, we wait for the market to come to the prominent lows and prominent highs, enter those levels, give us a break of structure, and then we'll continue with the trend. See, this is exactly what happened here. Market is bullish. Market came to this level, gave us a break of structure here. This is a break of structure for me. A move up. That's how easy it is. In the most basic sense, what I do is in my strategy is that I catch the trend of the market. If it's bullish, I wait for market to tap in liquidity zones and get this move up, this continuation move up. It's my strategy in the most basic sense. I find the bias, I find where liquidity is, and when market taps into the liquidity, I wait for market to shift in opposite direction, give me a break of structure, a market structure shift, then I buy. For example, in a buy side market, in a bullish trend market, market comes into my liquidity zone. At the liquidity zone, it rejects, right? It rejects and gives us a break of structure. Then we move up. Now you'll say this is just demand supply. It's actually very different than demand supply. Demand supply zones fail a lot more compared to liquidity zones. Liquidity zones are just below demand supply zones because at the demand supply zone, retail buyers say retail buyers press buy or sell, right? And exactly they are the liquidity. We are just below them. So when market taps into those levels, liquidate the SLs and traps new buyers or sellers, we are the ones who will continue with the big banks, hedges, hedge funds, and institutions. It might sound very complex right now, but let me show you. Let me show you on the daily time frame what I mean. So this is a gold chart. Very simple. If someone is a demand supply trader, what will they do? They will call this zone a demand zone. Just think that market never came here. So what will a demand supply trader do? He will wait for market to tap here and then he will press buys. Now, what's the difference? We wait for the market to come into these levels, make buyers and sellers. For example, the buyers who bought here, will have their SL here, liquidity point one. And as soon as market breaks this level, the breakout traders will enter sell positions, right? The breakout traders will enter sell positions. These two candles, the breakout traders, and this spike up, this wick up, these are demand traders will buy at this level. And we are the liquidity, we're the smart money. I don't trade smart money in ICT. This is liquidity sweep, and I have actually learned it from various people, compiled it and back tested it thousand and thousand of hours and traded a year plus on this, have so much data to prove that this is an amazing strategy with 70% win rate, 1:3 risk reward. Might sound very complex, but trust me, my risk reward is amazing. I often take less trades, but when I take the trades, they never give me less reward. And if they do, that's a loss. And I'm completely okay to take a loss as a professional trader. Loss is a part of journey. Loss is business expense. Loss is tuition fees. That's what a loss is. Loss is not loss. Loss is just business expense. When you start a business, you have to do business expense. So trading is a business. Loss is a business expense. When you do a degree, you pay tuition fees. Loss is just a tuition fees. So when market comes here, it traps demand supply traders, demand not demand supply traders, and actually traps breakout traders. Here is our breakout structure. What is our breakout structure? See, after market changed the shift to bearish, it should continue down. For me, after the liquidity zone of mine, this liquidity zone of mine, market comes into this level, gives me a break of structure. Break of structure for me is a bullish candle closing above previous candle. This is a break of structure. A candle, this bullish candle closing above this candle. Now you will say, let me show you an example of false break of structure. For example, you were trading this fair value gap. Market came here. This bullish candle closed. This bullish candle closed very strong, but that is not a break of structure. Why is that not a break of structure? Because it didn't close above the previous candle. Break of structure is only when it closes above the previous candle. See, right here, the candle closed above the previous candle. We take our buys here, SL here. There you go. There you go. It'll run right now, but I'm just telling you. It hit 2.2, 2.3, 2.4 very easy. So as I've explained all the theory of the strategy, now we'll understand some practical examples on real life charts. See, what do we know from looking at this USD JPY chart? From last around 23 days, it's bearish, right? It's bearish trend. So we'll only take bearish trades. Before we come into the market, what do we know? This is an important high. This is an important high. These are the two levels where liquidity is there. At 4 hour, we find these levels. We come on the charts on 1 hour time frame. We see there's a fair value gap. There's an imbalance here. We wait for market to come here. Then we dive down even lower to 15-minute time frame. See, there's liquidity here. I just told you liquidity. The whole concept should be in your mind by now, and it should be very clear. It should be on your tips to see where liquidity is. I'm gonna tell you the master secret at the end of the video. But see, there's a bearish trend. There's liquidity here. We dive down to the lower time frame. We are right now at 15-minute time frame. We wait for the break of structure. See, it is actually that easy, and it can be that easy. Here's the break of structure. SL above the previous high. There you go. 1 is to 3.39. Like nothing. And actually, if you hold, it can actually give you 1 is to, I don't know, 1 is to 4.57. And it's still going. It's still going. I don't count this because these are news spikes. And I don't trade news strictly, so I won't count these. But this is basically what you should see. Now let's understand this by an example of the pair odd USD. What do we see? In 1 second, market is bearish, only bearish trade. Where is the prominent high? Where is the prominent high? Be quick, 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 quick. This is the prominent high. Market taps into this level. I'm sorry, I'm not that quick. But this is the prominent high. This is the previous high. We go to lower time frame. We see this is the high. This level is the most prominent high. Now you'll say, why not this? Why not this? That is what we decided at 4 hour. At 4 hour, only this high is just as prominent. See, two equal highs. We wait for 30M market to come here. See, market gave us a spike here, gave us a spike here, takes all the liquidity, come down to lower time frames. See, I'm just showing you right now. Break of structure, entry, boom, 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 boom. It's that easy. It's actually that easy. Let's see another example in some other pair. We are at 4 hour GBP JPY. I'm gonna be very quick. I'll find example in a second. Yeah, there's an example right here. See, market is bearish. This is a fair value gap. This is your liquidity. This is your liquidity. Now you'll say this is a very small move. This is a small move on 4 hour time frame. For 15-minute traders, this is a huge move. Right? Look at this. Look at this. If you take an entry here and this move right here, it's easily 1 is to 3. It's easily. See, it's actually 1 is to 4. Let's see another example. USD CHF. Beautiful example. See, this is such a beautiful live example of what's happening in the market right now. USD CHF is a bullish pair. See, now you'll say this is also a break of structure. That is why I didn't trade the first week of December, because there are so many news and it's not following price action 1%. So I'll give you the previous example. See, this is the previous high, previous low in a bullish market. Previous low holds liquidity. See this week on 4 hour time frame, market comes to this level. On 30M, we might have something interesting. Right there we go. This is the liquidity, this level liquidity. Market entry, stop loss below those lows. Whoosh, buys 3.99, 3.99. And it's very simple. It's a very simple strategy. This is the Discord server. I'm going to show you some examples of my trade. See, I gave this trade at 9 p.m. It's been a while since I gave last trades because I didn't trade this week as there was so many red folder news. See, I gave this at 9. See this, 10.27, 1 is to 3 hit. See, UJ gave us 7 is to 7 risk reward, 1 is to 7 risk reward. I'm going to show you where I gave this. 1 second. Yep, here. See, right here. GJ, UJ. See, GJ. And here's UJ. See, there's liquidity came down. This is my strategy. Members are using it and it actually works. I'm going to show you more examples. See, members are getting funded too. It's just you have to work. It's just you have to work and be dedicated. It takes time. I haven't pre-recorded anything. I'm just going to show you. See our positions. Just an example of our positions. $645 made in one day. Yeah, see, GJ. Now you'll be like, but you never gave this trade. There you go. Just gave this trade at entry. At entry. Look at the time. 6:24 p.m. at entry. Look at this. Look at the time frame. Look at the time. 6:24 p.m. Both trades are given at entry, and see how it turned out. 1:10 risk reward. 1:10. These are live trades. I'm not faking anything. I can't fake a pre-entry, right? I can't fake a pre-SS. See, here again. Yeah, there you go. Euro USD. Yeah, sorry, my bad. I'm gonna show you gold before that. See, there's a gold trade. Entry here, boom, boom, boom. Now, I'm gonna be very quick in this. Here, a gold trade. I'm gonna be very quick there because there are so many examples. Is this the same one? No, these are different. See, these are signals I give every day, like this. I don't tell you exact entry because that's on you as a professional trader. You should know how to do it. I'm just going to tell you where I am looking, where I am thinking market will go. So these are not signals, these are just my point of views, and every member share their point of view. As a community, that's what we do. See, gold 7:56 p.m. 7:56 gold. It's a different trade. GJ. Let me see. I can't find so many. Yeah, I obviously can find, but I'm not able to find them exactly. Like I haven't pre-recorded anything now, so I have to see. Loss, completely okay. Loss is a part of game. I'm not scared to show losses. I know losses are part of game. Yeah, there's this trade. See, look at the time. 7:06 p.m. Gave gold sells. Boom, 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 boom. Look at this. Look at the beauty of this sells. These are so clean. I'm not clean, but you should have patience to hold at points like these. These are clean. These are already pre-recorded. Sorry, pre-given sells. This look at this beauty. And this is very normal for a strategy. And I'm not selling anything to you. I just want you to join it so we all can grow as traders. See, look at this. 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 So many winning trades we have here. So many winning trades. The ultimate amount of winning trades. See, look at this. Yeah. I'm just gonna end the video now. And as soon as you join the community, send me a DM. Actually, not send me a DM in this Forex channel. Say hi, and I'll let you know. I'll introduce you to everyone, and you can grow as a community, right? Till then, yeah. Goodbye.